Hello, and welcome to myfinanceteacher.org. Let's have a look at cryptos. Clearly, cryptos have kind of been somewhat depressing, coming down significantly over the last couple of months. And in my model portfolio, the long-term position in cryptos occupies around 13%, so unfortunately quite a sizable allocation. I was expecting some sort of a bounce over here into the middle of the ongoing Bitcoin cycle, and I did actually expect this bounce to come perhaps somewhere to around 48 to 50,000, which unfortunately it didn't happen. That's where I was going to reduce my allocation from 13% down to even lower levels, but the bounce didn't actually take place. Looks like this cycle is turning out to be some sort of a sideways movement cycle with a gradual downward momentum. And yesterday we saw a relatively significant low on Bitcoin, somewhere at about 29,000. Given that low, the main question here is whether we are going to see a new low or not. And in a sentence, I think there is a pretty good chance, say around 40% chance, that Bitcoin is not going to give us a new low, meaning that this cycle in Bitcoin has already finished with the low yesterday. But on the other hand, I think there is an even better chance, I would say perhaps a 60% chance, that the cycle continues down for another short while to give us that final cycle low perhaps in another couple of weeks before we can see some sort of a sustained bounce. Now, with this summary out of the way, let's have a look at some details. Firstly, if the cycle did finish yesterday, it would be the shortest cycle we've seen so far. The shortest I've seen beginning from the late 2015 is a cycle lasting for 40 days. Whereas the most recent cycle, if it did finish yesterday, that would be an extremely short cycle at only 34 days. This, of course, is a bearish factor, meaning that perhaps the cycle continues for another 1 or 2 weeks, and a more significant, or at least as significant over low is still upcoming. Another bearish factor is a death cross. A few days ago, we see the 50-day moving average crossing down below the 200-day moving average. And to see the effect of the death cross, let's see what happened at some of the previous death cross. Here, looking at March 2020, we see a death cross, but at that time, Bitcoin was already recovering, and that death cross was actually followed by a golden cross only a couple of months later. Here is another death cross in late 2019, and what we see here is that although Bitcoin did bounce sometimes after poking below the Bollinger Bands, the decline in Bitcoin did actually continue. Here is another death cross, that's in the middle of 2018. Again, a similar scenario as in late 2019. Although there were bounces after poking below the Bollinger Bands, the decline in Bitcoin did actually continue for a while after the death cross. And lastly, here is one more death cross, that's in late 2015, which was actually followed by a very strong rally in Bitcoin, moving all the way from under $300 to well over $400. So in general, these moving averages are, of course, some sort of a lagging indicator. First, we see a significant price decline, perhaps local lows, followed by these moving averages diving down after the prices. So to summarize, this 50-day moving average crossing below the 200-day moving average, it's only been a very bearish sign when Bitcoin was actually in a bear market, where we talk about those long market cycles in Bitcoin lasting for around 4 years, close enough to that halving period. And of course, in that case, the question arises, is Bitcoin in that bear market? Have we actually seen the top for Bitcoin somewhere around $60,000? Well, as I mentioned in one of my recent videos, I do think there is a good chance for Bitcoin to continue higher to at least $100,000 perhaps over the next couple of years. After all, it's more common for markets to top with an explosive move higher where everyone is clearly just ecstatic about Bitcoin rather than topping with this rounded top. And in that video on the long-term potential in Bitcoin, I go through a range of other factors pointing that this is a temporary consolidation. The link to that video is at the top of your screen right now. Now coming back to the technicals on Bitcoin chart, One positive factor is a positive divergence on RSI. We see that while price has made a lower low from early to late June, RSI is actually showing us a higher low, which is a positive divergence, which often comes before some sort of a bounce. Another positive factor is this bullish hammer candle over here, which actually poked quite far below the Bollinger Bands. On the other hand, Bollinger Bands are not very wide yet, so I actually still expect another one or two pokes below the widening Bollinger Bands, perhaps over the next couple of weeks before the ongoing Bitcoin cycle finally finishes. And in the meantime, if we do see a short-term bounce in Bitcoin, the resistance level above the ongoing price is of course somewhere around 41 to 43,000, which is based on a number of factors, the 50-day moving average as well as the 200-day moving average, as well as the mid-June high and late February low on Bitcoin chart. And if that resistance is broken, the next resistance level is somewhere between 46 to 47,000 on Bitcoin based on a couple of recent lows back in early March as well as in late April. Next, let's move on from the chart to a range of indicators, starting with the premiums on GBDC versus their net asset value. And this is some sort of a sentiment indicator. Whenever the premiums are very low, that's when nobody is actually interested in this asset, meaning that perhaps the proverbial blood is flowing on the streets, and that's when we want to increase our allocations. Currently, these premiums are around negative 11%, which I think is pretty close to at least a temporary bottom. Even if Bitcoin is in a bear market, and usually in bear markets, Bitcoin retested the previous highs, which means that Bitcoin might actually continue all the way down to around $20,000 to retest the previous high. Even if that level is retested, I still see some sort of a bounce coming out of current levels before Bitcoin might actually take a stab at retesting the previous high. So the risks are always there, of course. And whenever the ongoing Bitcoin cycle finishes, whether it did so yesterday or whether it does so over the next 1 or 2 weeks, I do see a next bounce coming into the next cycle, and whether that cycle will roll over into new lows, retesting the $20,000 or not, we'll come to that question. We'll come to cross that bridge when we actually get there, when we actually have at least some sort of a bounce. At the moment though, the premiums are quite low on Bitcoin. The discounts are actually quite large at just over 11%. Next, let's have a look at the crypto fear and greed index, which recently dropped as low as the value of 10. And it might actually indicate the low with, as I said, perhaps a 40% chance in my opinion. Although if you look at one of those significant lows in March 2020, at that time the fear and greed index actually dropped as low as the level of 5. So perhaps again there is a 60% chance that Bitcoin continues to decline for another 1 or 2 weeks to give us an even lower levels of market sentiment. Next, let's have a look at this market depth ratio, which is basically a ratio of buy orders versus sell orders on a range of cryptocurrency exchanges. Green mountains at the top of the chart indicate that there are more buy orders than sell orders, meaning that buy pressure might actually create some sort of a low leading into some sort of a bounce in Bitcoin, and vice versa on the red valleys. As we see on the chart, all through the first half of this year, the green mountains did actually align with some sort of a low going into some sort of a bounce. But looking at the most recent positive series of market depth ratios in May and June, at that time we haven't actually seen any noticeable bounce in Bitcoin. That's when I was actually expecting Bitcoin to bounce not just to 41,000, but perhaps somewhere to 47,000. And since then, what we're observing is another series of green mountains starting, so perhaps we are pretty close to another, at least local bottom on Bitcoin. And lastly, let's have a look at the Bitcoin Optimism Index, which, well, is generally still declining over the last few months. And again, while there is perhaps a 40% chance that the sentiment is going to improve from here, after all, this green line, the 10-day moving average, of the sentiment came all the way down to this dotted green line, just as it did at the previous significant low in March 2020. But unlike in March 2020, we don't see sentiment improving that much over the last few weeks, again indicating to perhaps 60% chance of another dip down in the short term. So to summarize once more, if Bitcoin didn't actually bottom yesterday, we are getting close to that cycle low, and I do expect some sort of a bounce into the higher resistance zones into high 40s, either starting any day right now or more likely with a 60% chance starting after another trip lower within a couple of weeks. And whichever scenario is going to play out, of course, time will tell. In the meantime, I think I'm ready to start gradually increasing my allocation to crypto, but that's going to be a very gradual process before we see some sort of a confirmation of a cycle low. I'm still holding a huge amount of cash in my portfolio. Lately, I've been accumulating cash, which is now sitting at slightly over 50% of the portfolio. And while I'm starting to reallocate that cash over the next few weeks, let me leave you with this question. Are we going to see Bitcoin sub 29,000 sometime in July? Let me know what you think in the comments below. While you are there, hit that like button, subscribe to the channel, and share this video with your friends. Have a nice day and good luck in your trades.